Is up, fellow goons? I'm here as always with David. How you doing? Eating peaches or something?
Mangoes.
Mango? Nice.
I need some sugar and some vitamin C.
Oh, okay. I don't think I had an apple this week. It was the first fruit I've had in a while. Oh no, I have a banana every day. Never mind. I have a banana every day. It's in a shake. I just forgot about it.
No, that's legit.
All right. So we're gonna look at we're gonna do some technical analysis here on this episode. So this week, a couple hot topics have been Tesla and Shiba. So we'll take a look at Tesla first because that's a little bit more real, I guess you could say.
Could you get more
Sam,
opposite?
Yeah, exactly. Sam, yeah, you want to pull up my screen there? Thanks. So this is a Tesla chart. Obviously, anybody who's been following the markets this week knows that we had this huge move up here. So David, I know you're loving this because you're like most of your accounts in this, right?
My yearly return was 27%. Before that, it's now just approaching 50% because of that. Year to date.
Well, yeah, it's basically like from the lows down here in May. That's like 100% move, right? Or 550 up to 1100. Yeah, 100%. That's awesome.
Tip, man.
That's awesome. All right. So yeah, I kind of wanted to walk through like why this move was so powerful because like David, I'm sure you can speak to the fact that like there's a ton of shorts. I think Michael Burry, like when did he say that he had a bunch of puts, right? He wasn't actually shorting this stock.
He had he had shorts worth that represented about $500 million worth of shares.
Okay.
And he announced exactly 2 weeks ago that he was out, and then this week this happened. So I got to give him credit. He's sharp. Like he has a thesis, but he's like us. When we're proven wrong, he gets the hell out of there.
Okay, so he got out like right here, right?
Mm-hmm.
Oh man, that's hilarious. Okay, watch this. He's smart, man. He's smart. Watch this. Okay, so line chart, right, guys? As always, line chart to draw your lines. Line chart for lines. Keep it simple. So check this out. So down here, like, obviously I'm a short seller, as you guys know. So I'm always looking for backside of the move. Like I don't take any trades on the front side anymore because sometimes you win, sometimes you lose. They're always sketchier. The risk reward isn't worth it to me anymore. So I only trade backside. So the way to determine front side versus backside on something like this, hold on, let me clean this off. So if we go like way back, around this area here, you're looking for kind of like shifts in momentum, right? So if we go way back here to 2020, this big run up here, like this is a major shift in momentum downwards here. So, and then ever since then, we've basically been all uptrend, right? Like it's been all uptrend. This was a downtrend here, but we double bottomed and kept going. So this is all still part of the front side. So this little notch right here, like that's your main front side move right there. So that's where I would draw my line. Like if I was going to short something, that's what I would consider backside. So, you're looking at something roughly like that, right? So check that out first of all. This is, we're lining this up way back, what is this? Middle of March 2020, right?
Are you looking at the daily?
This is the daily, yeah. Okay. So this is March of 2020, right here. Just these two little bounces between March. This is like over a span of 2 weeks. That's it. Like it's that small. But this is your front side, right? This is when the momentum shifts. So now we're on an uptrend. So this right here is all you need to determine front side. And if we go way out over here, all the way over to literally a year later, look at where we're bouncing off. Almost to the penny, right? All the way up. Like how it's really that simple to determine front side. So this little it always looks like this for some reason. It's always like you get some kind of an uptrend move, a bit of a pullback, and then you have two tiny little bounces that you almost can't see. That's your front side right there every time, guys. So that's the front side. So you draw your line all the way out. So that's why, to me, like this would not be a short anywhere up here because it's too risky. This whole move is front side, so longs are in control this entire time. And so what happens, because I used to get faked out like this a lot as well, is I would draw a line like further down, and I would say, okay, if you do something like this, you look here and you say, okay, it hits there. You have these two bottoms right here. They kind of line up. This kind of lines up. So a lot of people, what they would do is they'd say, okay, here, like, look over here. This is where we broke to new highs, right? From back here. So a lot of people are going to look at this and say, okay, this is the start of the move because that's where we went to new highs. So what you do, or what you shouldn't do, but a lot of people do, is they draw their lines here. And it makes sense, right? Like you come up, you have your base here, you bounce off it again, you have a double bottom here, and then it takes off again for another powerful move right there. Come over here, it fades down, bounces right off this line after a big sell off from previous highs. And then right here, it breaks, right? So a lot of people that are shorting are going to look at this and say, okay, now we're at the backside of the move. Like it's broken the trend, and now every pop is a short, right? Like that's how you read this. If this was the true backside, but we know it's not. This line down here is the true backside, right? Once that one breaks. But this is kind of the fake out line because this is the one that a lot of people read. So what happens to get these really powerful moves is you have so many people that think that the stock is broken now. They're saying, okay, it's been uptrending for a year. Now we've finally broken. So it's going to bounce. I'm going to short it. And then, it fades down a little bit and then it goes a little bit higher. You're like, okay, I'm going to short it again. And then you get this type of action right here is what kills shorts. This slow grind. If you have big moves up, you don't get really powerful moves because a big move up just hits everybody's stop, everybody's out, it comes back down, and then it does whatever. These slow grinds are super deadly because what happens is keep in mind everybody thinks this is broken, so they're saying, okay, short here, goes down a little bit, it goes a little bit higher, all right, I'll add to my position. It goes down, kind of goes sideways, goes a little bit higher, all right, I'll add some more, I'll add some more, I'll add some more. And then by the time you get over here, you're in way bigger size than you want to be. You're freaking the hell out, and that's when you get these massive explosive moves, right? So if you look at right here, so check that out, right where it breaks this, fake uptrend line, that's where you have that big explosive move because this is the point where everybody who's shorted underneath this line thinking that this is the front side of the move, that's when they say, okay, shit, we're reclaiming the front side, let's get out. But realistically, we never actually broke trend. The trend has been intact this entire time. So if we go over to the daily candle chart here, check this out. So literally, you have this tiny little green candle here, closes just over that line. What happens the very next day? Huge gap up, massive candle, huge volume, and then there you go. Like that's exactly what this is every short just getting stopped out, run over, margin call, whatever you want to call it. But like it's look at how precise that is. Like you're talking $10 on a $1,000 stock, and that's the next day. That's when it kills everybody. So that's why these grinds are so imperative to watch out for. But basically, the main thing that you want to look for is the fact that you have to know how to draw the front side line. As long as you know how to draw the front side line, you'll never get trapped in this sort of a situation. So it's just funny that Michael Burry, so this was the day right here that he closed out his position, right?
That he announced it. We're not sure when he did it, but he said he was out that day.
Okay, so it's probably somewhere in here, right? So I bet you that's what he did. He's probably looking at this because he's obviously a smart guy. He probably saw these two lines and was going, all right, if we creep over this line, I know that we're just gonna blow to the moon, right? So I'm gonna get out before that happens. But that's basically the nature behind that move. Like it literally doesn't get any more perfect than
He definitely saw the writing on the wall. There's if I could just graph a timeline, man, because 2 weeks before he said he was out, or a week or 2 weeks before he said he was out, the reporter from CNBC that wrote the article, the original article that said that he was going short, he basically downplayed that article. He reposted it and just said, I wasn't really in that big of a position. She exaggerated. She didn't know how to read this SEC filing, whatever. And everyone's just like, huh, okay. And then like a week or two later, he comes out and says, yeah, I'm out. I got rid of all my puts.
Yeah. So he knew what was going to happen, right? Like I was saying, I got to start going long on stuff like this, man. I know how to read the charts so well to know when shorts are going to get screwed. I should just start going long when I see that happening.
You're like that dude that can see pain in your clansmen. You'll be like, oh shit. It's like
I know.
I know what they're going through.
Yeah, yeah. I didn't even think to check this, man. I just wasn't even paying attention this whole time. But like, man, if you were accumulating long, like all you'd have to do is just set your stop just below this line, and you could just keep buying and buying and buying and just sell up into this move here. Because
And
that's probably what this big red candle was here. That was probably everybody that was actually like, quote unquote day trading or swing trading it that was holding from back here. That's probably everybody selling out right there. And then you have obviously, like your last minute chasers coming in right now. But that's a pretty powerful move right there. And like, look at the volume again. Like look at the volume on this candle in comparison to previous days. Like it's over double the size of it. But
you know
it's that one little candle. As soon as it closes over that line, that's game over.
what's really interesting now that you're explaining the technical side of it. The fundamentals actually line up too. It's that day, about 2 days before that move that you said that closed high, that little doji, that was
Yeah.
earnings. That was earnings.
Oh, okay.
It was like low volume earnings day. Everybody was kind of like scared, a little bit cautious. So
Yeah.
obviously they beat, and yeah, and
They
you can see
usually
the very next day. Sorry.
Companies are smart, man. They usually line up like some type of news with a chart pattern. Like I see it all the time in small caps where like I'll like because there's so many out there that you're not tracking them all the time. Like when you see a really explosive move and then you look at it, like it's like gapped way up or something like that, and then you look at it and you look at the chart and you'll say like the chart. It's almost always like something kind of like this where it's like it's sort of come close to a pivotal point and then they just use a press release or something like that to just blow the lid off of it, right? So that they can sell all their shares back to all the idiots that are buying it.
It's
So
crazy.
yeah. So you want to take a look at Shiba now?
Yeah, let's do that. Actually, just before you do it, just that movie
Yeah.
you're saying was a slow. It was a slow grind.
Yeah.
I'm gonna admit that I got caught in one of those last year. Last
All right.
year, last year, a month, almost like exactly 11 months ago. Last November, I got caught in one of those. I was trading Bitcoin futures, and I was shorting,
Yeah.
and it went against me, man. I blew that account. It was so sneaky. Like the thing that makes it sneaky is that it'll give you hope by coming back down just a little bit. You're like, oh, it's not over.
Yeah.
It's not over.
No, it's so contradictory, man. Because like when you're shorting and like even when you're like, I guess even when you're longing, because like you like buying, like you like buying big falling knives, right?
Yeah,
It's,
that's like
it's the same kind of thing. Like when I'm shorting, like my favorite moves are like really explosive, fast moves where it's like up and down and that's it. And then it's game over. Like, you're talking, 20-30% swings in like in a very short time frame. Whereas normal people look at that and they go, oh, that's so scary, it moves so fast. But like to me, this is way scarier, like this slow grind, because
yeah,
that's what tricks you into thinking that, okay, well, it's got to come down. And the same goes for the inverse. Like, if this was a slow, steady grind down, this happens on the long side too. Everyone's like, oh, okay, buy the dip, buy the dip, buy the dip, buy the dip. And then next thing you know, you're like, shit, I'm down like, 50% of my position and you're screwed. And then the same thing happens. You just flip this in reverse. All of a sudden it gets to a point where it just falls off the edge of the cliff and then you're game over.
you know what I think it is? Because we read emotions. We're looking at the charts. You and me recognize emotions in there. And so,
Mm-hmm.
like a violent move in either direction is emotional. So we're like, that's safe. We get exactly what's happening there.
Yeah.
But when it's a slow and steady thing, like something's amiss, man.
Uh,
Somebody's playing.
But you can play the opposite side, right? Like that's kind of like what I'd like to start doing if I see stuff like this on good companies. Is like if I see something like that, I can play the long side here, right? Just keep buying dips, and then just wait, and then sell a bit into the top here, and then if you get this move, then that's what you're looking for, right? Same short side. Like if I see like a steady grind down, you're pretty safe to kind of short pops all the way down and wait for that big crack when it just falls when all the longs give up.
I gotta mention a name, Cathie Wood. I don't know if you've heard of her. She runs ARK Investment, those ETFs. She's like a group of ETFs.
Yeah.
She um she gets a lot of shit because years ago she called Tesla $1,000 shares, whatever. Well,
Mm-hmm.
guess who was playing that play that you just described, that whole time, that entire move, she was buying the dips and selling the pops.
Oh, was she really?
And she got shit on every step of the way. Every time she bought the dip, she was like, "Oh, what a loser." And every time she sold the top, she's like, "Ah, she has no faith in Tesla."
It's just so funny, eh? When you look like when you think about Tesla or like something like this, like it's such a big like legitimate company. You know, it has a huge market cap, tons of shares, like, and the technicals just work out like so simply. Like it's like
Yeah,
I drew two lines here, and you literally could have made like a year's worth of profits just from those two lines.
absolutely. Like, this
Like
is why
it's
I love trading it. It's like it's very technical.
Yeah, it's crazy. That's why it's like it's if you learn how to read charts, guys, it makes everything so much easier. Because then then you're not scared when you get these big pullbacks and stuff. You're not panicking on every washout because you know what's going on.
The double bottom, like May 18th, middle of May, I
Yeah.
bought that. I bought that. That was the last of my orders, around the
Okay.
500s. And then I have like my low ball orders that are like low probability, but that was I remember I even posted on Instagram. I set my orders. I showed the picture of me setting my orders, and then I had a photo of like this episode from Game of Thrones where Jon Snow's like by himself. He's holding a sword. He's getting rushed by like a ton of horses. Like I'm
Yeah.
like, come at me, short sellers.
So funny. Yeah, like even this, I just want to point this out just before we switch over here. Like that's like it's not a coincidence that this double bottom lines up like that, right? Like this top line is your fake front side, and then this bottom line, this uptrend line, that's your real front side of the move. And like look at that. Like if you just draw a horizontal line between the two, like it crosses, like your horizontal line crosses almost exactly where it's basing off of these 2 points. Like it's not a coincidence. I mean, this is my favorite thing to see. Like if I can draw an uptrend line and a horizontal line and I see an X, and then I see some sort of like I see the chart coming towards it, like anytime you can cross a horizontal and a like a diagonal uptrend line together, like that area becomes so much more powerful. Like so much more powerful. Like if I'm shorting and I see like, say the chart was happening down here and it was like spiking up towards this, like, if it was over here kind of thing and it was spiking up, like I might be kind of like half size or something like that. But like if it kind of went along and then it had a big move like right up towards where I saw this X was, I'm going in full size, man, like full size on that there. Cause that's two major trend lines intersecting.
Wait, so you're saying if it bounces at the X, you would then take a short position?
Yeah, like if it was underneath that, or like same goes on the long side,
Oh,
right? Like for example, like say right here, right? Like if you're looking at these two, like if I was looking at this uptrend line and I was gonna, oh, I guess like we drew that line from that. So like over here, right? So something like this. Like if I was looking at this bottom uptrend line, like if this horizontal line was say, I don't know, like here, for example, like if you had a bottom, I don't know, if this kind of bottom like over here, right? If the chart came down and bottom there, and then that was where your base was, like if I was trying to buy this, I wouldn't really commit too much into that because you have your horizontal line way down here, and then if it gets down here, now you're on the backside, right? But because that previous base was over here, it just happens to line up really close with where they intersect. Like that becomes a really strong position to hold. Like anytime and it's just a time frame thing, right? Like it's like you have your uptrend line, you have your horizontal support line, and then you have the time. If all three of those line up, like this is the type of thing, if you see that, you can go into that full size super confidently every time. Like set a stop obviously because it doesn't work all the time, but like when I see this, these are the ones that like I'll throw my whole account at for a short.
I'm gonna send you a link to my trading view on the chart. Like, you know how I send you charts?
Yeah.
I realized so this was my long-term tested chart, so I hadn't looked at it in a while, but I realized like there was another pattern playing out. I just think it's crazy that your pattern and my pattern are two completely different patterns, but yet they indicate the same kind of thing.
Oh yeah.
Because I posted this, I because those white arrows, I didn't. They're a little funky looking because I drew them like months ago before the move. But when I saw the wedge forming, I drew it. I was like, I thought it was going to play out that way, and it did. Like it's crazy.
Yeah. Yeah. So it's
Like
the same thing. Like you're just lining up more and more indicators.
it's
Like this.
it's yeah. It's unreal.
Yeah.
It broke out exactly it's to 2/3 in when it's, when usually the wedges, happen. Like, usually a breakout will happen like 2/3 into a wedge. So it broke out, retested, the resistance, now became support, and it just started making its move up.
Yeah,
It's so
exactly.
technical. It's ridiculous.
Yeah. That like this is like guys, this is like, six-figure information right here. Like if you're not paying attention to this, like this is so critical. I'm telling you, like if you can learn how to draw like your major front side line from where the move truly starts, not where it's already moving and then it speeds up, where it truly starts. Draw that front side line. You get a big pullback like this, draw your support level, right? It even lines up over here with this one, just by fluke, whatever you want to call it. But draw your horizontal support line, and then if and it's funny because it usually works out this way too. That's the funny thing is like usually the timing works out because let's put it this way: like if this thing came over here, like if this rolled over right there and this came down back here, I'd be a little bit more nervous. Like there's a good chance that bounces a little bit and then falls right through because it doesn't have as much support. But because we were so close to that intersection, it just becomes so much more powerful. Like it's just statistically, it becomes like infinitely more powerful. So like that's the kind of thing where like if you see this, like you can buy everything you want right there and just be so confident with that move. If it goes below, you get out. You always get out, right? It's not going to reclaim. It might reclaim, but then you can get back in. But if you ever see something where the timing, your horizontal and your uptrend line all line up within like a couple candles of each other, like that's an incredibly strong level.
Confluence of indicators is, like, really powerful. I just noticed something. Was that the May 17th or 18th-ish?
Yeah, it was the 19th when it actually bottomed at the lowest.
If you're on the weekly and you pull up a 50 EMA, it bounced right off that line.
Oh yeah, yeah,
It's like
yeah,
crazy or what?
yeah. So like it's just lining up with more stuff, right? So you got four things lining up here now.
It's like everything's pointing at that spot. It's like that's the day to watch. That's the spot to
Yeah.
watch.
But that's the thing is like, like that's something that I've been doing too. Like I've been taking a lot of trades that aren't like perfect lately. So my plan right now is I'm kind of just like shutting that out because like for one, if you're losing on stuff like that, this is just like a trading antidote. But like, if you're trading stuff that's like, not super good setups, like let's say you're trying to make like a couple bucks here and there. And then what happens is like they're not as good. So you end up losing and then you'll win and then you'll lose. And then you'll see like a perfect A plus setup like this show up if you're a long bias trader. And because you've been trading kind of not that great stuff for a while, and maybe you've had a couple losses, a couple wins, trading's all a game of confidence. So like your confidence is going to be a little bit lower. You might not want to size into this really big, but like if this is like the only thing that you look for when you're trading, you just wait. You wait days, you wait weeks, nothing's happening. And then all of a sudden you see this, you go, okay, here we go. Like I'm throwing, 100 grand into this move for the long haul, right? And those are the kind of things that make your year. Like I don't personally know, but like I know of traders who like there's one guy I was listening to an interview with him, and he's a day trader. He traded 13 times in 2020, and he made over $3 million because he has one setup that he loves. He has one setup. It has to line up. The fundamentals have to be perfect. The news has to be perfect. The move has to be perfect. Everything has to be perfect. And then he'll short the thing with like $1 million account. But that's all he does. That's all he plays. If he doesn't see everything lining up perfectly, he doesn't even waste his time on it. But that's because he knows that the odds are so good and the risk reward is so high that he doesn't need to waste his time trading anything else. Right? It's just like it's more of an excitement thing. It's just you always want to be doing something. You always want to be watching things, but like if it's boring and you can find these really powerful moves, you can sit there and be bored and be making $1 million. Like, and that's probably the best way to do it. You don't want to be stressed out all the time. You give yourself a heart attack.
I think that's a great point. Like because trading is all about perspective, right? So it's like approach this like a job, with discipline and with strict rules, right? Yeah, it's fun making money. It's fun getting excited, but no, like you have to treat it like it's serious business.
Yeah, exactly. It is. It's a business, right? Like, I mean, you every time you make money, you're taking money from someone else on the other side of the screen, right? When
Yeah.
you're in the stock market. So like if you're sitting there and you're kind of half-assing it and you're just fumbling around, like there's people that you're trading against that this is their whole life. They're putting 10 15 hours a day into studying. They know everything. They know all the fundamentals. They all the technicals. They've been doing this for 20 years. You've been doing this for 6 months, and these are the people that you're playing against. Like think about if you're in a sports game. It's like, oh yeah, I know how to throw a football, so I'm gonna go out and I'm gonna go play the Giants. Like no, you're going to get killed. Like, it's no different in trading, right? Like you got to put the work in, and you got to know what you're doing, and you got to be confident. And put the time in, treat it like a business, and be smart about it. Otherwise, you're just going to lose. It's like a game.
Yeah, yeah, definitely. No, you can't approach it without having a lot of patience. I think that's the key to all of it, whether it's trading
Yeah,
or investing. The more patient you are, the more advantageous you are.
I think that's why it's so hard too, is because like people and like myself included when I first started. I mean, you have this weird conception where it's like, okay, if I go to work at my job, it's like I work 8 hours, I make a couple $100 or whatever. So it's like time is directly correlated with income. Whereas like in trading, you could spend weeks and weeks and weeks and months studying, and then you take your first trade and you lose $200, and you're going, Jesus. So not only did I waste all that time studying, the first time I go to work, I had to pay to go to work, right? So it's
Yeah,
it's weird because like you could sit there at night and set up your watch list, get everything ready, and then you wake up the next morning and there's you don't see any trades that you like, and you could just sit there and watch it and be like, all right, I guess we'll go for a walk and come back tomorrow. But you have to be okay with doing that.
I gotta say I got burned the other way. I have problems where it's like I'll string together a bunch of small wins, and then this one big loss will wipe me the fuck out.
Yeah, that's been like I haven't been wiped out, but like that's been my problem lately. Is because it's just taking like too big of a loss, like small wins, and then a big loss.
Yeah. For me, I know it happens because I string together the wins. I start to think like maybe I'm right, and I start to not doubt myself as much, and then I get trapped. I trap myself basically.
Yeah, it's a problem though, right? Because like even if you do the statistics on whatever setup you're playing, like if it's like 80% of the time you win, then it's like okay, you could do 40 trades in a row where you win, but you still know that sometimes that setup just isn't going to work, even if everything is perfect. It's like if you just won so many times, that's why like biggest losses are after the biggest winning streaks, because like mentally you're sitting there and you're going, no, like I haven't lost anything in 2 months, like I have to be right. This is the same as all the other ones, but then it's just that one fluke that's wrong, and then you keep adding and adding and adding, and it's like, all right, well there goes a few $1,000 or whatever.
I hope the viewers are getting the taste or getting the feel for how psychological this whole thing is. It's a total mind fuck.
Yeah, my biggest improvements in trading came after I started reading books about psychology, not about charting, not about technicals, not about fundamentals, psychology. Like once I understood how to recognize stuff in my own head and think about what other people are thinking and really like think more three-dimensionally, that's when everything started to click for me. Because I already knew like this stuff's easy. Like I'm even just watching our videos here, like you guys can see how simple that was on Tesla that we just looked at. Like, and that's a huge company. Everybody's talking about it. You think there's manipulation, you think there's short sellers, you think there's all these news articles, pump and dumps, whatever you want to call it. But I drew two lines, and it worked out literally to the day and within a couple dollars, and we could see exactly how that move happened. So the technicals are easy. It's just understanding the psychology behind it that's the hard part. So
It's
what's
like
the
it's like anything, self control. Like, can you stop yourself?
Yeah, it's
Yeah.
very hard. It's very very hard. Like trading is not easy. It's simple, but it's not easy.
Yes, that's a good way to put it.
Yeah. All right, let's take a quick look at Shiba here for 5 minutes, and then we'll shut this down because I don't want to talk too much about this.
Well,
Everybody's
yeah.
about it.
Speaking of temptation,
So we have this lovely chart here. I mean, to me, like I see this and I'm thinking, oh, this looks like a great short, but I don't short anything that's 0.0000008 of a cent or whatever the hell that is. But
it's like its float is like in the quadrillions.
it's so ridiculous. So I just want to show you guys where the shorts got screwed again here, because that's kind of like what I do. So I swear to God, man, I gotta start going long on these things.
You really should. I don't. Yeah.
Like it's so easy for me to see this stuff. I just never pay attention to it. Okay, so check this out. So we have, if you look at this, you got this nice little, we got this nice little bull flag going on here, right? So this is actually a pretty bullish chart. Like if you look at that, like I'd probably consider buying in this candle if I actually bought stuff. But so what happens here is, we've talked about this before with reading candlesticks. So when you get this big, what's the technical name for that one? Was that a shooting star? I don't know.
Which one?
This one right here.
Yeah, shooting star.
Okay, I just call it a big top wick. so, so yeah, you get this shooting star with the big top wick. So volume's always really important, guys, right? Because like you can think of volume as demand, right? Like if you go to a shopping mall or like Christmas time, like everybody's in line to get the new Xbox or whatever, like that's demand, right? That's what volume is. So you just think about this as demand, right? How many people are interested in this stock? So what happens here? If you look at the volume, this candle here, we get it breaking out of this flag essentially. So this is a first move, but a lot of times when you hit the top here, it gets stopped and it can sell back off, right? Like that's why I don't like longing, because it seems like every time I try to buy these, it would just get stuffed. But in this case, it's kind of interesting, and I think this is the reason we had this explosive move, is because this was a huge volume candle again, but we had this huge upper wick, which basically signals like a whole bunch of selling, a whole bunch of shorting, right? So like as soon as this thing popped, like everybody's selling out of their positions, everybody's shorting because like they're taking profits, right? You got to remember, we're looking at the beginning of October down here over to mid October, end October. So in 3 weeks, like some of these people that were holding since back here, I mean, I can't do the math on this. Like, what would they be up? 400? Yeah, 400%, right? Something like that. So
Yeah.
if you bought in this run up, by the time you get this pop, you're up 2, 3, 400%, right? So you're taking your profits. Like that's huge gains in a matter of 3 weeks, right? So that's kind of what this is shorting. People selling, they smack it back down. But then what happens the next day is you have this other candle that's strong, right? It comes back up and it closes high. This to me is like, if you're short, bail. Like if you see that after a big stuff candle like this, like that's when you want to get out. Because anytime you see a big stuff candle like this where it pushes it down really quickly, the next candle you should see is a big fat red candle. So if you don't see the big fat red candle and you see a little green candle, if you're long, that's a great buy signal. If you're short, that's your signal to get the hell out of there, because it's going to do this, right? So that's kind of, I think, the signifier for this big move. And obviously, coupled with all the news and the excitement and everybody's trying to get rich overnight and all that kind of stuff. But that's kind of just like the quick, Cole's Notes technical analysis on that one there. You have anything you want to add, or?
Yeah, that candle is super important because if you're any kind of institutional trader or like just a professional, the classic reversal from a shooting star, what you want to see is that U shape that you just described. One red candle, one red or green, the shooting star, and another red. It creates this reversal to U shape. That's when it's confirmed this bitch is going down. But
Yeah.
it didn't. But it didn't. And so when that day, when that candle closed the opposite, like everybody who's a professional or an institutional investor was looking at that and they were paying attention. They're like, these guys are fucked. We're going in.
Yeah, exactly. That's why like being able to read candlesticks and stuff like that is so important, because it just makes everything super simple. Like this is a really, like, I mean, like this Shiba thing, like it's gambling, guys. Like it's garbage. Like if you're gonna, like we have people messaging us being like, oh yeah, like just threw like 10 grand into this thing, and it's 2 days ago when it's up here. Like I mean, like next week this thing could be back down here. It could be at new lows. Like that's the reality, and like it probably will. It might not. Maybe it goes up 10 times, right? Who knows? I don't know. Nobody knows. Bottom line is it's a gamble. So like if you're just buying this thing up here last week, you have to be aware that you're just gambling. Like you honestly, if you're gonna throw 10 grand into this, it's like buying $10,000 worth of lottery ticket. Like that's what it is. And if you don't realize that, then you need to not put your money in the market, in my opinion. If you're buying down here based on technical analysis as a trader, that's very different. If you're playing the move, you get in, you get out. Like this is 100% move right here from 4 to 8. So you take that, you take your move and get out. Like when I trade like line to line is what I call it. So like I literally like let's say I was shorting this for example, just to make this really simple. We'll wrap it up after this, but just to make it really simple. Let's say for whatever reason I had these two horizontal lines drawn in from some daily resistance back, a couple months ago or whatever, right? So if I was playing this move and I saw this rip up, I'd short into this line if that's what I'm looking at, and I'd cover everything into this line. And that would be it. I'd be done. I wouldn't touch this next move. I wouldn't touch this candle. I wouldn't try and add more when it broke. I would short here and I'd cover there and I would take it off my screen because that's the move that I know. That's what I'm waiting for. It did what I wanted. Everything else to me is gambling because I don't know what it's going to do at that point. It's the same thing with this, right? Like if you're a long trader, you see this stuff move, you see this next green candle, you're thinking, okay, this thing's going to go up. So what do? Well, you zoom back. Okay, so here's our previous high, like 4, right? So if it was me, I'd draw a line right across there, and I would say, okay, well, I bought in here, so like what I'm gonna do is I'm gonna sell probably a big chunk into this line, which in the grand scheme of things looks like selling way too early, but that's your next resistance level. So like I'd sell into this line, and then maybe I'd hold the rest, and I just sell a piece here, piece here, piece here, piece here, and then maybe I got my last sell halfway up this candle, and then it goes way up again. Well, I'm already out. Like I'm not gonna buy in again because the move I was looking for was this one down here, and then just sell in pieces up into resistance, and that's it, right? So that's kind of the way you guys need to look at this: is you got to have a plan, you got to have an entry plan, you got to have an exit plan, and you got to know what your risk is. Because if you don't have those 3 things in place and you're putting your money in there, you literally are better off just going out and buying $10,000 worth of lottery tickets as opposed to putting $10,000 into this thing, because you have no idea what it's going to do. Like David and I have been looking at these charts. David, you've been doing this for what, 8, 9 years? I've been looking at these for 4 years. So we got 12, 13 years of looking at charts between the two of us. I mean, I'm pretty confident to say that neither one of us can tell you whether or not this thing's going to go up or down on Monday. Like you can't know. So you play the move and you get out. That's it.
It's just funny that we see a lot of messages of people like online buying in at this point, and this, like, if you're reading the chart right now, this point is the worst time to buy. It's like it's called reversion to the mean, right? It's a trading right in the middle. This is no man's land. This is not the time to take a position. There's no directional bias. You don't know what's
Yeah.
going to happen.
Well, I mean, like if you did want to buy up here, like what I would do is wait for another one of these. Like, if this consolidates over a period of time, and we get another one of these bull flags happening, if this just stays in this range and you start getting a bull flag, then look to buy, because now you got some support, you got a bit of a pattern to work on. But like if you're just buying into a spike like this, I mean, there's nothing. Like this thing could come all the way back down to this top before it finds a base and comes back up. So, if you threw 10 grand into this thing and it goes from, 7.5, 8 back down to 4, okay, you just lost 5 grand. Are you like, you're probably just going to panic and sell, right? And then maybe it wicks right down to here and then it bounces up and it goes to 20, and you're going to lose your mind. And then you're going to do the same thing again. You're going to buy up a here again, and then it's probably going to drop all the way back down to 0. And then you're going to be fucked. You're going to lose your 20 grand plus your 5 grand you already put in. Like, so just don't do it, guys. Be patient. Look for the lines, read the chart, and be smart about it. It's not an investment. This is a trade. If you want to trade this, trade it based on a plan. Don't put your mortgage into here. Don't sell your car and throw all the money into this thing because you think you're going to be rich overnight. It's not going to happen. And if you do make $1 million overnight, I guarantee you're going to lose it in a year in the stock market anyway.
Oh, that reminds me, that story that you said somebody put 8 grand into Shiba and it was worth whatever billion, 5 billion right now.
Yeah.
So I now I'm thinking about it more, and I'm like, I think that thing is like a bit of a scam ish. It was a setup, like, because people who don't know how to trade feed off one story like that. It's like if even one guy in a billion did that, you think you could be that guy too, and then you're like, you know.
The way, again, you can just attribute that to the lottery, right? Like many people buy lottery tickets every day? I don't even know. Like a million, 10 million? Like I don't know. Is that low? Maybe it's 50 million, right? Like I have no idea. But like, do they print news stories about the 10 or 20 or 30 million people that lost? No, you only hear the one single article about so and so who won $400 million on the Lotto Max last week, and then everybody gets excited. They're like, "Oh man, I got to buy a lottery ticket." Like there wouldn't be enough news articles in the world to print stories about everybody who lost money. It's the same thing, right? Like you're never going to hear the story about the guy who lost his house or the guy who got divorced or the guy who couldn't send his kids to college because he lost all his money in Shiba. You're going to hear about the one guy who lives in his mom's basement, has nothing to lose, threw 20 grand into this thing last year because he thought it was, just a YOLO play or whatever, and he made, $100 million, and now he's riding off into the sunset. Like, good for him. It's not going to happen to you. And if it does, then congratulations, but don't ever trade again because that doesn't mean you know what you're doing.
Didn't they interview that guy? He did Doge. Remember, even after Doge crashed, he was still put on the news. He had long hair. He was like, "I bought Doge. He's a millionaire."
Oh yeah, is the guy that call himself like slum Doge millionaire? Is that him? Fuck, what is that thing at now?
But he's like, "Ooh, is that Doge?"
No, is it this one? Yeah,
That is
that is a hideous chart, man.
It's going back
So
down.
look, right? Like this is the kind of thing that we might get, right? Like it's kind of similar to sheep. So we might get this where you have this kind of low consolidation, rips up, everybody buys in here, and then it drops down like, over 50%. Like, that's a lot of people are going to sell. They're going to panic. But maybe it does this. So what I would say is when it goes up here, wait, see if it does this, and then look. Remember we were just talking about that big top wick on the other chart? Well, look what we have here. We have a huge bottom wick, right? That's a lot of buying pressure. So now we're consolidating and now we're creeping up. Okay, now we can start looking at buying because we have a set risk and we have clear candle indication that there's buying pressure on this thing to go higher. That's when you want to buy. You don't want to buy in all this nonsense over here when you have nothing to work off of. So like Mr. Slum Doge millionaire is, his millions probably turned into like, I don't know, 100 grand or something by this point.
And the worst part is at this point, he actually thinks he's lost millions of dollars unrealized. Like he thinks he was a millionaire, and now he's like,
I don't even know. Like I don't know anything about that guy. Because he's like, but
I guarantee you, he's telling people his sob story. Oh, I was a millionaire. No.
Yeah. Well, if he had sold, he would have been a millionaire. I would have sold it all and put it into Tesla.
Right?
All right. Let's wrap it up there. I think that's enough for now.
Yeah, I think if anything, people should take a deeper look on the psychological side of it because that's the real battle here. Not misunderstanding the technicals. That's easy, like you said.
I think the number one word of advice I can give. I don't know the best way to articulate it, but basically, if you feel excited and you feel like you have to get in right this second, that's probably a really good indicator that you should not do that. Because if you're getting really excited and you're pumped and you're, all giddy about something and you don't know anything about trading, that's probably a really good indicator that that's the worst time to buy. Because anybody like David and I, when we know that everybody's excited about stuff, that's when we're looking to take a trade because we know that a lot of people are going to do stupid shit, which is going to make it move like in a big range that we can make money on, right? So if you don't know how to trade and you're just buying based on a bunch of news articles and all your buddies are talking about it and you're really excited and you feel like you're going to get rich overnight, that's probably the worst time that you can buy. So if you can keep that in your head, then you'll probably save yourself a lot of headaches.
I think they'll probably end up losing the money, but as long as they keep that in their head, they'll realize that, oh, this is me doing this thing, and hopefully they can refine it and not make that mistake again. They'll recognize it.
Yeah, just write it down. Be like, I'm really excited, but I'm buying a bunch of Shiba. October 30th.
Yeah.
And then leave it on your desk. And then if you lose all your money, you can put that on your wall so that next time you get really excited about something, you go, that happened last time. I'm not going to do that again.
Yeah, trust us. Me and Kaylin have bled blood and bled tears and bled money.
Oh, yeah. Lots of money. Lots of money. All right. Thanks for tuning in, guys.
All right, see you later, goons.